Hey everyone, Travis here, the Stock Geek. And today I just want to share with you my story of how I became a professional investor. There's a lot of mystery around hedge funds and professional investing and what that means. So I just want to share my personal story about that journey. So I got interested in stocks and finance right at the beginning of college because, I got to college and it was the dot-com bust and no one wanted to do tech and everyone wanted to do finance. Goldman Sachs was the hottest place to work. You had 25 and 30-year-olds making tens of millions of dollars. So I said, I want to do that. I want to become really wealthy before I'm 30 or 40. And that's probably not the right reason to go into finance. But luckily for me, I also found once I got into it that I just really enjoyed the subject. And I really loved markets. I loved how dynamic markets are and, the opportunities in markets. And I love stocks in particular because they're real assets. They're companies that are out there doing interesting things and creating products and selling things and generating value and employing tens of thousands of people, right? So the stock market in particular was very interesting. But I started with stocks just when I was a freshman in college with I think $2,000 in an E-Trade account. And I was investing in a lot of dumb stuff, right? I was trying to generate lots of value and double my account every month. And it wasn't working because I was investing in super risky stuff, which was the wrong way to go about it. But, that turned into just finally taking the right finance courses, learning, accounting, learning corporate finance, learning what a stock really is and how to value a stock. And so luckily I had that foundation. I was able to intern at a hedge fund of funds, which is a fund that invests in other hedge funds. So that gave me a really interesting view into what elite professional hedge fund investors are doing, how they generate returns, high returns, market-beating returns year after year, at least the good ones. And, a lot of it isn't actually that mysterious. There are funds that do really complicated things like arbitrage, statistical arbitrage, and algorithmic trading type of stuff. But there are a lot of hedge funds that are just doing research and taking long positions in companies or taking short positions in crappy companies, betting that the long companies will go up and the short ones will go down. And so I got to see what the best long-short equity hedge fund investors, how they approach investing in stocks, where they go to find interesting stocks. And so that was a really pivotal time for me. And then luckily for me, the next summer I got to intern at Goldman Sachs in New York. I got to go rotate in a couple of different trading desks at Goldman, which was a phenomenal experience. I highly recommend if you have that opportunity that you go do it. Not a lot of people do, but luckily I was able to do that. And it's a place full of dynamic, smart people. I know that we can say a lot of bad things about Goldman and things that they've done over time, but generally I found it to be a place of people with integrity, people just very, very sharp and smart, and I learned a lot. Ultimately, I also learned that I didn't want to work there forever, as much as I think there are people there that can make a lot of money and doing interesting things. I actually thought that their clients, the hedge funds that they typically serve, were the more interesting jobs because they were actually the ones getting to make direct investments. Goldman, mostly as a broker, Goldman is just facilitating trades and then hedging their risk, whereas the hedge funds themselves are actually making bets and doing the research and making investments. And so I wanted to go do that as quickly as I could. Luckily, I was able to join a hedge fund out on the West Coast right after I graduated college. And we were a long-short equity hedge fund, and I did really, really deep research. And I got to learn what it means to dig into a company, to interview customers and suppliers, to actually go meet with the CEO and CFO and ask them questions about the business and their industry. I even got to go visit factories and go, on site and actually, spend a week driving around to different either retail stores or talking to customers. And so some of the investments we looked at, I was able to actually on the ground go do real research. And so that was fun. A lot of deep financial models and really figuring out to a very precise number what we thought a company was worth. And so that way we could figure out when we should buy and sell it. But it was a really formative experience where I really started to come into my own as an investor. And I'll say that professional investors, while I don't think they should be given all this credit for being geniuses, they do have a lot of advantages in terms of money and tools and just a very focused approach that they're spending all of their waking hours doing that. So professional investors obviously do have that advantage over us as individual investors. But After that hedge fund, I got to go to an upstart hedge fund that was managing a much smaller amount of capital. It was sort of a couple years ahead, I guess you could call it a startup hedge fund, because it was didn't have much of a track record, but it was back in Texas. And the reason I joined was because the founder was very interesting. I thought he was one of the best stock pickers I'd ever talked to. I thought he had a really interesting approach, and their performance in the early years looked like it was pretty good. And so there was this opportunity where I could join as a really key member of the team. There were only a few people there at the time, and I could help drive that fund's success. And I joined in 2008, right before the financial crisis hit. That was probably the best and the worst time to join a hedge fund. Luckily, I was able to keep my job, and we were finding the most amazing opportunities at the end of 2008 and early 2009. We were finding just incredible values in companies that, I'll give you an example. We bought a data center company that was down 80%. Its key tenants were Microsoft, Apple, Amazon, and Google. They were 96% leased in their data centers. And the stock was down 80% as if it were about to go bankrupt. And it was being valued at a fraction of its true value. That eventually, I think at one point it was a $2 stock. We bought it. I think within 18 months it was a $30 stock. So those were the kind of opportunities you could find at the depths of the financial crisis, when everyone else was selling, everyone else was fearful. And so luckily we were able to keep the fund alive, and we didn't lose all our investors during that time. And in 2009 we had the fund's best year ever, and our returns were massive and created lots and lots of wealth for our investors. And so that was a fantastic learning time. It was a stressful time, and we worked hard and we delivered value, and that is just all you can ask for as an investor. So we did a lot of interesting things too. We got into distressed situations where we looked at companies that were going through bankruptcy. So we did get a little bit more deep into some advanced areas of investing, but overall, you pretty much could have just found opportunity almost anywhere back in 2009. So that was a really interesting time. Now, fast forward about 6-7 years later, I decided that I didn't want to stay in the hedge fund world. It was either stay there and maybe open my own fund, or go off and actually try to build some value myself, create companies, create education for other investors, and then invest my own portfolio. And so that's what I'm doing now, and I'm hoping to take this experience that I have as a professional investor and help other investors like you become much better investors in a shorter amount of time, and take some of the principles that I learned from the professional world of investing and try to get some of those advantages as an individual investor. And so, this is a pretty new YouTube channel, and I hope that you'll join me on this journey. I want to help, open lots of opportunities to everyone, and I think that it could be a fantastic time for investors to find amazing opportunities again in the markets. So, thanks guys for hearing my story. I'll see you soon.